Brooks Macdonald shares hit as £244 million mandate yanked. Brooks Macdonald's share price has taken a hit after revealing higher net outflows and that it lost out on a £244 million mandate. The wealth manager hemorrhaged £506 million over the 6 months to the 31st of December 2019, the first half of its financial year, a reversal from the same period last year when it drew in £241 million worth of net new business. Shares in the company sunk as much as 6% to £20.63 as markets digested the news on Thursday morning, but had rebounded to £21 as trading commenced. Grosvenor Wealth Management pulls £244 million contract. Half of the redemptions came from Brooks losing a single mandate with Grosvenor Wealth Management. The contract accounted for £244 million in funds under management, FUM, and £600 million in annualized revenues. Brooks said the agreement with Grosvenor was terminated after the two parties failed to reach a satisfactory commercial arrangement over the purchase of a sponsorship company attached to the Grosvenor funds. Despite an uptick in redemptions, the DFM's FUM remained stuck at £13.1 billion between the end of June and December, lifted by £448 million of performance-related gains. Brooks's total investment performance was up 3.4%, ahead of the MSCI WMA Private Investor Balanced Index, which rose 2.9%. Chief Executive adopts cautious stance. Chief Executive Caroline Connellan, pictured, said it had been a positive 6 months with the group continuing to improve its margins over the medium term and acquiring Scottish manager Cornelian, a move she said would create additional value for shareholders. But she continued to adopt a cautious stance on markets. While the recent UK election has removed some uncertainty, the broader macroeconomic and political backdrop makes it prudent to remain somewhat cautious about the short-term outlook for flows, said Connellan. The DFM said revenue, underlying profit and underlying profit margin were ahead compared with the same period last year and in line with expectations. In its last set of full-year results, Brooks said its drastic staff cuts had helped boost profit margins by 12%. The wealth manager axed 50 jobs last January as part of a streamlining plan which it said would help the group respond to clients' and advisors' evolving needs and make it easier for advisors to do business with the firm. Last October, Brooks's founder John Gumpel announced he would be leaving the business after 28 years. For more on this story, visit the news article link.